Welcome to The Deep Dive, your express route to understanding complex market stories. Today, we're plunging into Allegro MicroSystems' first quarter fiscal year 2026 earnings call. And let me tell you, this report presented a truly fascinating puzzle for the market.
It really did. On one hand, we saw undeniably strong operational results from Allegro.
Yeah.
Yet if you were watching the ticker, the market's immediate reaction told a dramatically different story.
Right.
So our mission today is to unpack that divergence. Why did the market react so cautiously to what looked, on the surface like a strong quarter?
And what does it mean for Allegro's future? Let's get into it. Let's start with the immediate numbers for Q1 FY26. Allegro reported revenue of $203.4 million.
Yeah, that's a solid beat against estimates.
And a robust 22% increase year over year. Pretty strong.
Definitely. And their non-GAAP EPS.
That came in at 0.9, also beating the midpoint of their guidance. So strong headlines, right?
Absolutely. The top-line performance was impressive. However, like you said, the stock saw a significant pullback right after the announcement, despite those beats.
Yeah, weird reaction.
It really suggests that while the operational results were good, investors were looking deeper. Other factors, maybe, created hesitation.
It's a classic case of the market looking beyond just the headline numbers, I suppose.
Exactly.
Okay, so digging a little deeper into their financial health, what stood out there?
Well, their non-GAAP gross margin improved significantly, got up to 48.2%.
Okay, how much of an improvement was that?
260 basis points sequentially. That's a healthy jump.
Nice.
And what's more, they generated impressive free cash flow, about $51 million.
Which is what, as a percentage of sales?
A full 25% of sales.
Yeah, okay.
Yeah. Robust indicators of efficiency, good financial management.
Okay, but there's always a but, isn't there?
Well, we also saw GAAP EPS at negative 0.07 cents.
Oh, okay. The GAAP versus non-GAAP GAAP.
Right. And that distinction, it often becomes a point of, let's say, contention for some investors. For Allegro here, it suggests that despite the strong operational figures, maybe the accounting noise contributed to that initial market caution.
Along with maybe broader sector stuff going on.
Yeah, exactly. Broader sector currents likely played a part too.
Okay, let's unpack this more. Management's view. CEO Mike Doug, he highlighted some pretty compelling growth drivers, didn't he?
He did. E-mobility sales surging 31% year over year. That's significant.
And industrial and other sectors?
Even more remarkable, actually. A 50% year-over-year jump.
Wow. Okay, so that suggests really strong demand in their key strategic areas.
Yeah, and what's particularly compelling here is the emphasis management put on the underlying momentum. They talked about continued strong bookings, an increasing backlog, significant design win activity.
So not just one-off sales.
Exactly. These reflect sustained traction in critical areas: e-mobility, data centers, robotics, automation. It points to a robust pipeline, which is crucial.
And innovation's part of this picture too, right? They launched some new products.
They did. A new ASOL-C current sensor for XEV inverters, so electric and hybrid vehicles.
That's ASOL-C meaning.
Automotive safety integrity level compliant. Basically, it meets high safety standards. And this new sensor lets customers use 2 instead of 3.
Optimizing the bill of materials, reducing cost, size, weight.
Precisely. Smart move. And they also rolled out a new 48-volt motor driver IC.
For
efficient cooling fans, specifically in those booming AI data centers.
Okay, so targeted product development hitting growth areas.
Absolutely critical. These innovations drive future dollar content gains, especially in those high-value applications. Plus, their focus on cost innovation, optimizing manufacturing, improving test yields for TMR devices.
TMR being tunnel magnitude resistant.
Correct. That directly helps margin expansion. It shows a clear strategy for both top line and bottom line growth. Investors like to see that.
And the CFO, Derek, he underscored financial discipline too.
Yeah, with a voluntary debt paydown, $35 million in the quarter.
That sends a clear signal, doesn't it? Financial stewardship, strengthening the balance sheet.
For sure. And that non-GAAP gross margin hitting 48.2%. That's a key financial takeaway.
Not just accidental.
No, it mostly came from favorable pricing negotiations last quarter, plus cost reductions finally cycling through inventory, FIFO basis,
First in, first out. Got it. So that sequential improvement really shows those operational efforts are working.
Right.
So when we see these strong revenue gains, margin improvements,
yeah,
How's it translating to overall profitability? What about operating leverage?
Good question. Their operating margin improved significantly. It hit 11.1%,
Up from...
up from 6% a year ago. And that's on a 22% sales increase.
Okay, so that clearly demonstrates the operating leverage in their model, growing revenue faster than expenses.
Exactly. And that impressive free cash flow, 25% of sales, just reinforces their financial strengths, their ability to self-fund investments, especially after, the M&A turbulence earlier this year.
Right, the withdrawn bid. We'll come back to that.
Yeah. The key insight here is that Allegro is showing a highly scalable business model.
Okay, let's shift focus to the broader market. Are we seeing genuine, sustainable demand signals, or is this just like a momentary blip?
Well, management reported an uptick in customer conversations about potential component shortages.
Ah, okay. That's usually a pretty powerful indicator.
It really is. It signals real, growing demand in both industrial and automotive. Suggests the cycle is turning and customers are moving beyond just burning off old inventory.
And it sounds like industrial is particularly strong here.
Absolutely.
Yeah.
Data center, robotics, automation, they were big contributors to that industrial growth. Impressively, it offset some noted softness in clean energy.
And they're pushing more into data centers, right?
Yeah, expanding their dollar content footprint, new fan drivers, current sensors, upcoming isolated gate drivers, positions them well there.
Okay, what about automotive? We've heard, mixed signals from the industry lately. Some companies reporting slower demand.
It's interesting, actually. S&P Global revised its auto production forecast up for the year.
Really? From what to what?
From an initial slight decline to now basically generally flat.
Okay.
And Allegro's own customers are apparently requesting expedited deliveries.
Which lines up with signs of recovery, even if it's not exactly booming yet?
Right. It suggests an underlying need from their customers is starting to bubble up.
So are they actually shipping enough to meet this rising demand, or is there still some catch-up needed in the distribution channel?
Yeah, they're not quite shipping to true end demand yet. Their Q2 revenue guidance midpoint, $210 million. That's still below their estimate of end demand, which is more like $230 million.
Okay. And inventory levels?
Distributor inventories are way down, 28% year over year.
Wow.
Now, some regions, like Europe, apparently still need reductions, but they are seeing a need to restock certain parts.
So the net effect
Means distribution channel sales might stay flat in Q2, but that underlying unmet need, it's definitely there, points to future upside.
Got it. Okay, looking ahead then, what did management guide for Q2 FY26? What should we expect short term?
They projected Q2 revenue between $205 and $215 million.
Midpoint implies.
A solid 12% year-over-year increase.
Okay. And margins and EPS?
Non-GAAP gross margin expected between 48% and 50%. And non-GAAP EPS in the range of $0 to 14 cents.
And they're continuing the debt pay down?
Yep. Planning another $25 million voluntary repayment. Still focused on balance sheet strength.
So that guidance, it signals confidence, right, in their mix utilization, even if the broader auto signals are a bit choppy for some competitors.
Exactly. Signals confidence.
Now, here's where the story gets maybe extra intriguing for investors. This earnings call didn't happen in a vacuum, right? It comes after that pivotal moment earlier this year.
Oh, absolutely. That definitely shaped market expectations and probably explains some of that initial caution we saw.
You mean the ON Semiconductor bid?
Exactly. We can't forget, ON Semi's withdrawn $6.9 billion offer back in April. That bid valued Allegro shares at $35.10.
Right. The stock jumped on that news initially.
And then fell significantly when the bid was pulled.
So that event provides a very recent external benchmark for the company's valuation.
Precisely. It suggests a potential floor, maybe, that the current share price dip has now challenged.
It's like the ghost of M&A past influencing present sentiment.
Yeah, and likely a factor in the market's post-earnings reaction, no doubt.
Okay, and industry-wide. What's the broader backdrop for semis? Tailwinds or headwinds?
Well, the broader cycle is showing clear signs of recovery. The SIA reported a strong 20.6% year-over-year increase in July sales.
Okay, that's positive.
Yeah. Now, auto analog demand specifically, it's a bit mixed, maybe normalizing, but the overall trend for semi-capex and sales is definitely upward.
So a supportive environment for Allegro to operate in?
Generally, yes.
So where are Allegro's big, long-term strategic bets placed? What are the growth areas they're really targeting?
Their main focus is e-mobility, particularly ADA.
Advanced driver assistance systems.
Right, and EV applications. They're hitting this with innovative current sensors And importantly, new isolated gate drivers for silicon carbide
Yeah.
power systems.
Which are crucial for EV efficiency.
Exactly. And the AI data center market is the other big one. A significant opportunity for dollar content expansion.
Any signs of progress there?
Yeah, they mentioned increased sampling of their CLC-based isolated gate drivers. That's a key development, shows progress in these strategic high-growth spots.
Okay. What about China? That's a pretty substantial piece of their business, right?
It is 28% of revenue, critical market.
How are they navigating that?
Management highlighted strong momentum in e-mobility design wins with local Chinese OEMs. And they really stressed the importance of their China for China supply chain strategy.
Meaning producing locally for the local market?
Essentially, yes. That approach seems vital for staying competitive and sustaining margins there, especially with, increasing local competition and all the geopolitical stuff.
Makes sense. Okay, two crucial topics, capital allocation and pricing. What did management say?
Capital allocation, still squarely focused on debt reduction. They see that as the most accretive, the best use of capital right now.
But still investing in growth.
Yes, reinvesting organically in R&D and sales in high-growth areas. But importantly, they're doing it through reallocation within existing OpEx.
Not just ramping up spending overall.
Right, keeping that discipline. On pricing, they expect to land in a, quote, normal year-over-year price reduction environment for automotive.
Which sounds like stability, more or less, not aggressive erosion.
Yeah, suggests stability.
Okay, finally, let's tackle seasonality, that tricky element for semi companies. Does the recovering cycle actually have the power to override historical trends, especially looking towards year-end?
That's a good question. Historically, the December quarter sees about a 5% sequential decline for Allegro.
But this time?
Well, given the current secular tailwinds, where we are in the cycle, it's just not clear if that historical pattern will hold. The company itself suggested it could range anywhere from a 5% decline to maybe even a 5% increase.
Whoa, okay. So real uncertainty there.
Yeah, reflects that uncertainty. The cycle might just be strong enough to overcome traditional patterns. An interesting wild card for investors.
Okay, this is the part where we put on our most speculative yet plausible hats. Remember, everyone, this is not financial advice. We're just thinking out loud, like analysts pitching ideas, exploring potential implications.
Exactly. And given that market reaction, the immediate 8.7% dip, despite solid beats, strong guidance, there's this clear divergence, right? Fundamentals versus sentiment.
Creates a fascinating setup.
It does. For those willing to look past the immediate noise.
So my first thought is that market reaction feels like maybe an overcorrection, driven by short-term stuff, the gap loss, maybe that M&A hangover from ON Semi, general sector jitters.
Could be.
But management seems to be executing, right? Operational improvements, innovation, paying down debt. The underlying fundamentals look pretty robust.
Okay, so that leads to a potential idea. Let's call it a reversal of fortune long play. You've got the revenue beat, expanding gross margins, great free cash flow, a clear strategy in growth areas like e-mobility, AI data centers.
Plus that external validation point, the withdrawn on semi bid at $35.10.
Right. It offers that recent benchmark. So the current dip could be seen as a potentially attractive entry point.
For investors who buy into the semi-recovery story and Allegro's execution specifically, expecting a bounce as the market maybe reconciles those fundamentals.
The core trade idea, initiate a long position in Allegro MicroSystems, ticker ALGM. The thesis is the market eventually catches up to the strong underlying story. The dip is the opportunity.
Okay, plausible. What else?
Well, expanding on that, you could think about a leveraged recovery strategy. Look at the Q2 guidance. It still shows positive momentum. More debt repayment, improving product mix.
Right.
So if the semi-cycle recovery picks up steam, maybe faster than people expect, and if Allegro's design wins start translating into faster revenue growth,
then the stock could rebound pretty sharply.
Exactly. So the idea here might be a long position in ALGM stock, maybe coupled with selling some out-of-the-money put options.
Okay, how does selling puts help?
It generates income if the stock stays above a certain level. Or if the market stays cautious and the stock dips further, it lets you buy more shares at a lower predefined price.
So you're effectively leveraging your belief in the fundamental recovery while maybe managing some downside risk or lowering your cost basis?
Kind of, yeah. It's a way to play that potential leveraged upside.
Interesting angles. So to recap our deep dive today, Allegro MicroSystems delivered a strong Q1, beat on revenue, non-GAAP EPS, showed notable margin expansion, impressive free cash flow.
Yeah, and they outlined clear strategic growth drivers, e-mobility, data centers, and gave solid guidance for Q2, emphasizing continued financial discipline. All looks good operationally.
However, the market's initial reaction was cautious, reflecting maybe concerns over that gap loss, broader sector stuff, maybe the ON Semi shadow.
Right. Which creates this compelling scenario for investors. You have to weigh the divergence, management's positive outlook versus the immediate market sentiment.
The question for you, the listener, is, will Allegro's fundamental strength eventually win over the market's current skepticism? Something to ponder.
And as always, please remember, the discussions and these trade ideas we just tossed around are purely for informational and entertainment purposes.
Absolutely. They do not constitute financial advice. Always, always conduct your own thorough due diligence before making any investment decisions. Thank you for joining us on the deep dive. We hope this look into Allegro MicroSystems has given you a clearer picture and maybe sparked some new insights for your own analysis.